Hello and great welcome. So after having completed till up to 3.6, now we are moving over to 3.7, and this is the question with which we are going to start today's this particular session. Hope each one of you are absolutely ready. Correct? So Dettol and Savlon are two partners and their profit sharing ratio is given to you, and you can see it is 7:3, and after that their balance sheet on 31st of 3, 2023 is at our disposal. And in the balance sheet, as usual, we come across items like capital accounts of Dettol and Savlon, and besides that, another item to note is that on the opposite side, that is asset side, we have got debtors, and already there is a provision of 2,000 and 44,000 is written in the outer column. Correct? So these are the things which are given in this particular question as far as balance sheet is concerned. Then further it is stated that on 1st of April 2023, Revlon is admitted into the firm for 1/4 share. So its profit sharing ratio will be 1/4. Goodwill is valued at 40,000. So goodwill is valued at 40,000 and Revlon is to bring necessary amount in cash as premium for goodwill. So in this case, as you can see, Revlon's share of goodwill will be how much? Because this is firm's goodwill. Firm's goodwill is 40,000. So 1/4 he is going to bring. That is 1/4 of 40,000, 10,000. Correct? Further, it is given 20% of the reserve is to remain as provision against bad and doubtful debts. Now try to understand this. We have got in general reserve 10,000, correct? Out of 10,000, partners have decided that out of 10,000, we are going to keep what we call 20%, that is 2,000 for reserve for doubtful debts or for provision for doubtful debts. That means out of general reserve, 2,000 I will transfer to provision for doubtful debts. And balance 8,000 will be divided between the partner, Dettol and Savlon in the ratio of 7:3. Is it clear to you? Now, what will happen if I am going to transfer 2,000 to provision for doubtful debts? In the new balance sheet, I will write debtors 46,000. And provision was already 2,000, and now we have created another provision of 2,000, so provision balance will become 4,000. So in the new balance sheet, I will write 46,000 minus 4,000, and in the outer column 42,000. Further, it is given that stock in trade is to be reduced by 40%. Stock is coming down by 40%. Further, it is given that Dettol is to pay off the bills due. Now you can see here in this particular case, amount of bill is equal to 20,000. So Dettol has decided to pay it off. So what entry you are going to pass for the same? Bills payable account debit to Dettol account. Actually, we are going to credit the Dettol. Why? Because if firm would have paid the bills payable, then firm would have written to cash. But this liability is being paid by Dettol. That means now firm is supposed to pay to Dettol. Is it clear to you? Earlier firm was supposed to pay to the what we call for bills, and now firm will have to pay to Dettol because Dettol has paid off this particular liability. Further, it is given that Revlon is to introduce 30,000 as a share of capital, to which other partners' capital shall have to be adjusted. So on the basis of new partner, we will have to do the capital adjustment. This is the question. Logically, you should be in a position to do this particular question of your own, but still I will do it for you. Correct? So in order to do the question, first of all, what we are going to do. 3.7 is the question. Correct? 3.7. So far in this particular question, 3.7. Just for the sake of better understanding, actually I am doing it, otherwise it is not needed. In this particular question, first of all, we need to understand that new partner is bringing in capital equal to 30,000. Correct? So our entry will be cash account debit to. This will be my first entry, cash account debit to new partner's capital account. New partner's capital is Revlon, and is bringing in capital equal to 30,000. So I am going to write here 30,000. Is it clear to you? Second entry. New partner is coming up with his share of goodwill. So cash account debit to premium account, or simply to premium for goodwill account. To premium for goodwill account. Now firm's goodwill is estimated at 40,000. This is firm's goodwill. And new partner share is 1/4. So quite obviously he is going to bring how much? is going to bring only 10,000 rupees. So 10,000 premium he has brought in into the business. Obviously, this particular premium now we are going to transfer to old partner's capital account. So entry will be premium for goodwill account debit, premium for goodwill account debit, 10,000. Because only old partner share are given and new partner share is given, so it means actually old ratio itself will be sacrificing ratio. So premium for goodwill will be divided between Dettol and Savlon, to Dettol to Savlon. And in the ratio of 7:3, that is 7,000 and 3,000. Sacrificing ratio is 7:3. 7:3 will be your sacrificing ratio, that is equal to old ratio. Further, in this particular case, another line was there that firm has decided to transfer 20% of the general reserve to provision for doubtful debts. You can see in the balance sheet, general reserve is how much? In the balance sheet, general reserve is actually 10,000. So out of 10,000, we have decided to transfer 20% to provision for doubtful debts. So to provision for doubtful debts. So 20% of 10,000 will be equal to 2,000. Correct? Now balance 8,000 will be divided between Dettol and Savlon in the ratio of 7:3. So that is 8,000 into 7/10. That is equal to 5,600. 5,600. Is it clear to you? And then 8,000 into 3/10. 8,000 into 3/10. That is equal to 2,400. 2,400. There was yet another information in the question with respect to bills, if you remember. Now bills payable in the balance sheet is equal to 20,000. Is it clear to you? It is given that Dettol has taken the responsibility to pay bills payable. So bills payable account debit to Dettol account. Dettol is credited, I am telling simply because if firm would have paid, firm would have written to cash. That means this liability on behalf of firm is being paid by Dettol. So firm is now supposed to pay Dettol. Correct? So that is why Dettol is credited 20,000. So as far as entries are concerned, these are the entries which we need to write, although in the question entries haven't been asked. Correct? So after having written these entries, now we are in a position to prepare the revaluation account. I will prepare the revaluation in this particular case. In order to prepare the revaluation account, first of all, in this particular case, let us have a look again because I have forgotten. There is only one information with respect to what we call stock only. It was given that value of stock is coming down by 40%. So I am going to write to stock 20,000. There is no other information with respect to revaluation. So ultimately there is a loss of 20,000 in this particular case. The loss of 20,000 will be transferred to Dettol and Savlon in the ratio of 7/10 and 3/10. That is equal to 14,000 and of course 6,000. Correct? Now we are going to prepare partner's capital account. In this particular case, partner's capital account. Partners are Dettol, Savlon and Revlon. Dettol, Savlon and Revlon. Interesting names, isn't it or not? Yes, sir. Very interesting name. First of all, look into your balance sheet and let me know what are the balances of Dettol and Savlon. On the balance sheet, in the balance sheet, on the liability side, you will find the balance of Dettol is equal to 50,000. Of Savlon is equal to 40,000. So we have brought down the balances. This is the first thing which we are supposed to do. Then in the balance sheet, there is general reserve. And we passed an entry for general reserve, if you remember. As per this particular entry, we wrote the entry general reserve account debit to provision for doubtful debts because we transferred 2,000 to provision and balance was transferred to Dettol and Savlon. So 5,600 and 2,400. This is how you will have to write here. Is it clear to you? Then there is revaluation loss. So revaluation loss will be incorporated towards the debit side, 14,000 and 6,000. 14,000 and 6,000. Is it clear to you or not? Right, sir. Now in this particular case, new partner, as I told you, is coming up with 30,000 worth of capital. You wrote the entry cash account debit to R's capital account. So he is coming up with 30,000 worth of capital. You are going to write 30,000, correct? And if you intend to actually prepare cash account, you can do so. In the cash account, if we will look into the balance sheet, there is opening balance of 36,000. You will write first of all balance brought down. Then you are going to write to Revlon. Revlon is coming up with 30,000 worth of capital. Then another entry was cash account debit to premium for goodwill account. He brought the premium, so to premium account or simply premium for goodwill account. 10,000 was the premium brought in by him. Since we do not prepare premium account, there is no question of posting it anywhere else. Now the next entry is premium account debit to Dettol and to Savlon. So we will transfer premium. 10,000 worth of premium will be transferred to old partners in their sacrificing ratio, which happens to be old ratio itself, 7,000, 3,000. Correct? After this, if you remember, we wrote an entry, bills payable account debit to Dettol account. Because in the entry Dettol is getting credited, we are going to write here by bills payable because he paid the liability on behalf of the firm, so his account will increase. Why? Because now firm is supposed to pay Dettol 20,000 rupees. And due to this entry, now what will happen? Bills payable will not appear in the balance sheet. Is it clear to you? So as far as this particular question is concerned, this was the information. Now we are in a position to tally them off. First, let me tell you. After tallying them off, what balances we are going to get? Let me write the balances. Balance carried down. As far as balance carried down is concerned, that is 70 and 77, that is 12,600. Balance is equal to 68,600. 68,600 will be the balance. And now you are going to balance it out. It will be equal to 39,400. 39,400. And in this case, the balance will be equal to 30,000. Is it clear to you or not? Now, after having computed the balances, you simply bring them toward the lower portion. Balance brought down after all the adjustment in D is 68,600. 39,400 is the balance of Savlon, and Revlon balance is 30,000. Is it clear to you or not? So now we have brought down the balances. After balances have been brought down, now we will have to do the working to find out their capitals. So capital adjustment. New partner's capital is given, and on the basis of that we have to find out the new firm's capital. Very simple. First of all, I will write here new firm's capital. New firm's capital. So new firm's capital will be equal to how much? So new partner's capital is 30,000, correct? Now what should I do? I should divide it by his profit sharing ratio 1/4. That will deliver me 1,20,000. That becomes new firm's capital. So now we are able to find out new firm's capital. I have told you several times, there is one way is that now I should compute the new ratio and divide this 1,20,000 in the new ratio to find out the capitals of all the partners. But suppose if I do not want to find out the new ratio, the best methodology is that, first of all, what you do, you pluck out the ratio of the new partner. Sorry, you pluck out the capital of the new partner. We know that Revlon's capital is 30,000. Out of 1,20,000, Revlon's capital is actually how much? That is 30,000. Now, remaining capital. That means in the new firm, capital of old partner must be equal to 90,000. Capital of the old partner must be equal to 90,000. Is it clear to you? Now you simply divide this capital in their old profit sharing ratio. So in the new firm, capital of D will be equal to 90,000 into 7/10. That is equal to 63,000. Correct? That is equal to 63,000. Similarly, capital of Savlon will be equal to 90,000 into 3/10. That is equal to 27,000. 27,000. Is it clear to you or not? 27,000. So we are able to trace out the capitals of the partner as per the working note. I am going to write here to balance carried down, of course, as per working note. That is equal to 63,000. Sorry, right, 63,000 and then 27,000 and then 30,000. So these are the capitals. Now, only thing is that we have to balance it out by simply writing to cash or by cash, depending upon the fact whether any partner has got surplus capital or deficient capital. So now if I am going to balance it out, his capital is 68,600, whereas required amount of capital is 63,000, isn't it or not? So quite obviously in this case, Dettol is having a surplus of 5,600. So I am going to write here 5,600. Even this particular partner is having higher capital, 39,400, required capital is 27,000. Again, there is a surplus, and surplus is equal to 12,400. So you will write here 12,400 to cash. In fact, this is your balancing figure. Is it clear to you? Since you have written here to cash, you are going to write here by D. His surplus capital is paid off, 5,600. Then you are going to write here by Savlon. Savlon is also paid surplus capital of 12,400. Is it clear to you? Now simply you write balance carried down. Now balance carried down will be equal to 58,000. 58,000. This is how you are going to prepare the cash account. As far as preparation of balance sheet is concerned, within a flick of second you can prepare the balance sheet also. Suppose if I happen to prepare the balance sheet of this particular firm, balance sheet of new firm, I mean to say. Now the balance sheet will be prepared in this manner. Suppose if I start with liability side, sundry creditors, no change in it, 40,000. Bills payable will not exist in the new balance sheet simply because of the fact that bills payable have been paid off. Now we shall write here capital accounts. As far as capitals are concerned, we know that D's capital is 63,000. Savlon's capital is equal to 27,000. And R's capital is equal to 30,000. So total is equal to how much? Total is equal to 1,20,000. 1,20,000. 1,60,000 is the balance sheet total. Is it clear to you? Now on the opposite side, I shall write here by cash. Cash amount is 58,000. Then I told you regarding debtors. Debtors in the old balance sheet which is given to us at gross figure. Gross figure is 46,000. Now I am going to subtract the provision from doubtful debts. Now provision for doubtful debts earlier in the balance sheet is 2,000. And we created another provision because out of general reserve we transferred 2,000 to provision. So that means now the balance in provision will be equal to 4,000, isn't it or not? So in the outer column we shall write debtors equal to 42,000. Is it clear to you or not? Absolutely. As far as stock is concerned, value of stock has fallen down by 20,000. So 50,000 minus 20,000, you are going to write 30,000. And then patents, copyrights, no change in it, 30,000. So this is how you are going to do this particular question. Now, after this, we have come to the end of section 3. Correct? Now we move over to section 4. Now section 4 is not tough at all. To be very honest with you, you can easily manage it by yourself. Actually, why I have kept this particular section, sometime very small nature question comes. Just to acquaint you with those questions, I have kept this particular section. Section 4, see here, very simple. Pass entries for the following at the time of admission of a partner. Unrecorded investment is 5,000. Unrecorded investment. That means you are having an investment, but you haven't recorded it. So suddenly when you find that you have an asset and which you haven't recorded, that means now it comes to your notice that you are having an investment, but you haven't recorded it. So now you will record. Now what will happen? Your assets will increase. Your assets will increase, so it is a gain to you. If your assets are increasing without losing out anything, it means it is a gain. In order to increase the asset, we always debit it. So unrecorded asset account debit to revaluation account, this will be my entry. Is it clear to you? And unrecorded asset will also be reflected in the balance sheet, just to make the point clear. Likewise, unrecorded liability is worth rupees 2000. Now question says there is unrecorded liability. Correct? Now because it is an unrecorded liability, that means there is a liability but you haven't recorded it. So when now you are going to record it, what will happen? Your liability will increase. So any increase in liability, correct, without getting anything. For example, if I purchase furniture on credit, in this case furniture is coming, my liability is increasing, it is not a loss. But if liability will increase and I'm not getting anything, it is considered as loss. So that is why your entry will be revaluation account debit to unrecorded liability account, and unrecorded liability will also be presented towards the liability side of the balance sheet. Now question says sale of scrap 5000. Sale of scrap. Actually, you must have noticed sometime, especially if you subscribe to newspapers and all, after 2-3 months, your mom actually sells the same, isn't it or not, to Radiwala? Isn't it or not? Is it clear to you? So in that case, whatever you get due to sale of your old newspaper, because old newspaper is almost like a scrap for you. So when you are selling your old newspaper or scrap, that means valueless items, which are almost scrapped. Scrap means you have scrapped it. These are out of use now. But if you are selling it and getting against the same, it is considered as an income, it is considered as a gain. Because now it is considered that you are receiving something without losing out anything, because that item is an scrap. Scrap means it is valueless item for you, but still if you are getting against that particular item something, so it is considered as a sort of gain. So that is why your entry will be bank account debit to revaluation account. Now due to this entry, what will happen? When you will pass this entry, what will happen? Your cash will also increase. On the credit side of revaluation, you are going to write by bank, in bracket you can write scrap. So it is a gain and your cash is also increasing. However, you have to pass all the entries, hardly 2 marks question. Similarly, question number 4.2. In 4.2, it is stated that on the admission of Mr. Mouse, a revaluation of assets and liabilities was done, and it was found that an item of 10,000 included in sundry creditor is not likely to be claimed and hence should be written back. What does it mean? That means in the balance sheet, there are some sundry creditor. Out of those creditor, 10,000 worth of creditors are not likely to be claimed. That means you are not supposed to pay them off. So it is a gain to you, obviously. So if it is a gain to you, revaluation account will be credited. And of course, if liability reduces, liability is debited, because your sundry creditor are reducing, correct? So sundry creditors account debit to revaluation account. Is it clear to you or not? This is what you are going to pass the entry. Similarly, in 4.3, it is given at the time of admission of Mr. Computer, the assets and liabilities of the old firm Messrs. Laptop and Flaptop were revalued as follows. A provision for doubtful debts at the rate of 10% was to be made against the debtors worth rupees 1 lakh. So there are debtors, and you have to create a provision of 10,000. So your entry will be revaluation account debit to provision for doubtful debts 10,000, 10,000. This will be your first entry, revaluation account debit to provision for doubtful debts 10,000, 10,000. Is it clear to you? Further, it is given creditors to be written back. Whenever word written back will be there, it means creditor will have to be written off. Especially to reduce asset, we use the word write off. To reduce the liability, we simply says write back. Is it clear to you? That means we have to reduce the creditor. If our liability decreases, it is a gain to us. So creditors account debit to revaluation account will be your entry. Now it is given building worth 5 lakh to be appreciated by 2 lakh. Value of building is moving up, so you are going to debit the building account by 2 lakh. And of course, it is a gain to you. You are going to credit what we call revaluation. In 4.4, what is given to us? Plant or book value worth rupees 6 lakh was undervalued by 1 lakh. Now this is very important, and many a time I have seen actually people commit a mistake. What does it mean? That means in the balance sheet, your plant is appearing in the balance sheet, your plant is appearing at in the balance sheet, your plant is appearing at 6 lakh. Is it clear to you? Now question says that plant and machinery is undervalued by 1 lakh. What does it mean? That means whatever its market value, you have written this item at a figure less than 1 lakh of the market value. For example, if market value is 7 lakh, then only I can say that this item is undervalued by 1 lakh. Are you getting my point or not? So that means it is written plant and machinery is undervalued by 1 lakh. Indirectly, it means we have to increase it to bring it to the market value. So because plant and machinery will have to be increased, so your entry will be plant and machinery account debit to revaluation account. Likewise, in second point, it is given equipment was worth rupees 5 lakh, was found undervalued by 50,000. Equipment was worth rupees 5 lakh and overvalued by 50,000. What does it mean? That means in the balance sheet, you have written equipment at rupees 5 lakh. In the balance sheet, equipment is written at rupees 5 lakh. Now question says that it is found overvalued by 50,000. Question says that it is found overvalued by 50,000. What does it mean? When we say it is found overvalued, it means we are comparing it with the market value. Indirectly, it means whatever is market value, we have written this item at a value which is more than market value by 50,000. What I mean to say is, suppose market value of this item is 4 lakh 50 and I have written this item at 5 lakh. So I will claim that I have written this item or this item is overvalued by 50,000. That because market value is 450. So it means it is overvalued. So that is why I have to now subtract 50,000 to bring it to market value. So in this case, it will be considered as a loss and your entry will be revaluation account debit to equipment account. Further, it is given in the question that book value of the stock is 1 lakh. Out of its 10,000 worth of stock was to be discarded and 20,000 worth of stock was found obsolete. What does it mean? In the balance sheet, you have written, let us say, stock worth rupees 1 lakh. In the balance sheet. Now question says that out of this 1 lakh, question says that 10,000 of the stock is discarded. Discarded means to throw out something. So that means it is useless for you. So it is of no use for you. So this is a loss for you. And question says that 20,000 worth of stock is considered as obsolete. Obsolete means it has become outdated. Again, it has become of no use. So it is also a loss to you. Correct? In the question, my first entry, as I told you, it was written in the question that plant and machinery was undervalued. So we have to increase it. My first entry will be plant account debit to revaluation account. In the second entry, equipment was overvalued. So we have to reduce it. So revaluation account debit to plant and machinery account. And third point regarding revaluation, see here, revaluation account debit 30,000 to stock, or you can simply write to stock 30,000. Is it clear? Now, question says that unrecorded investment. I have already told you unrecorded investment account debit to revaluation account. This will be your entry. And unrecorded liability. So entry will be unrecorded revaluation account debit to unrecorded liability account. This is how. That means these are the questions which sometimes strike in the examination and they hardly actually encompass 1 or 2 marks, not more than that. Now we are moving over to section 5. And section 5 is pretty interesting section. And very first question is interesting question. See here. I have written the title past rectifications. Past rectifications. What does it mean, past rectification? I will let you know. Just pay attention first. Question says that Quick and Slow are partners in a firm sharing profits and losses in the ratio of 3:2. Quick and Slow are two partners. Their profit sharing ratio 3:2 and the balance sheet of the firm on 31st of March 2023 is given to you. Question says that in the balance sheet you have furniture and fixtures, office equipment, motor car, stock, sundry debtors, cash at bank. Then Quick's capital, Slow's capital, you have general reserve and sundry creditors. These are the items which are given to you. Now question also says that On 1/4/2023, a new partner by the name of Smooth was admitted, and it was agreed that he will bring some private furniture worth 10,000, private stock worth rupees 8,000, and in addition he will contribute 50,000 cash towards the capital. The very first entry is interesting. Sometime new partner, and in fact, most of the time new partner, when he gets admitted, he brings along with him cash. Generally, he brings his capital in cash. But that doesn't mean that capital can be brought only by new firm in the form of cash. That's a different point that till up to this particular stage, in all the question, we saw that new partner was coming up with cash only. But sometime under rare situations, new partner can bring along with him what we call his private assets, and those assets will be considered also as a part of his capital. For example, in this case, new partner is coming up with furniture 10,000, stock 8,000. So furniture 10 plus stock 8,000 plus 50,000 cash. He is bringing in three things. So his total capital will be 68,000. Is it clear to you? Further in the question it is given that he would bring proportionate share of goodwill. Further, he will bring proportionate share of goodwill. Proportionate share of goodwill means, first of all, we will have to compute the goodwill of the firm, and then we will multiply it with the proportion of the new partner, that means his profit sharing ratio. Then we will get his share of goodwill. So he would bring proportionate share of goodwill, and goodwill is valued at 2 years purchase of the average profit of the last 3 years. So in this question, you will have to compute the amount of goodwill, and after that you will multiply it with the share of the new partner to get his share of goodwill. And for the computation of goodwill, you are given in the question that profits of last 3 years, correct? 52,000, 32,000 and 28,000. These are the profits given to you of last 3 years. Now, this is the point due to which actually I am doing this particular question. However, on checking the past record, it was noticed that on 1/4/2021, a new furniture costing 8,000 was purchased, correct? But wrongly debited to revenue account. And in 2023, a purchase invoice of 4,000 dated 25/3/2023 has been omitted in the books. So this time, and sometime what happened when a new partner gets admitted, because on that date generally old partners and new partners, they do a thorough checking of the what we call assets and liability, and suddenly they come across that they might have committed some errors, correct? For example, in this case, 2 errors have been committed, so we will have to rectify, and that is why this question is of rectification. Further, it is given that firm charges depreciation on furniture at the rate of 10%. So, in point number 4, we will have to do some rectification, and how we are going to do, I will let you know. Further, it is given that goodwill is to be computed on the basis of correct profit, and this line is of paramount importance. And what replication it is going to have, that again I will have to, then again I will explain, but you will have to wait for a while. Further, it is given on revaluation, value of stock is to be reduced by 5% and motor car is worth rupees 85,000. So 2 items of revaluation are there. Further, it is given Smooth duly paid the required amount of goodwill and cash towards his capital. So he has paid his share of goodwill and he has brought in his capital also. Further, it is written, it was decided that future profit sharing ratio. So this time in the question, future profit sharing ratio or new profit sharing ratio, all partner is given. So in case if you would require, then we shall have to compute the sacrificing ratio. And importantly, new partner's profit sharing ratio is 20% in this particular case. So these are the things which you have to keep track of as far as this particular question is concerned. Is it clear to you or not? Now, in order to do this particular question, what I am going to do first of all, or what you are supposed to do, see here, in order to comprehend it better, see here, which is the question that is section 5. Okay. Section 5. in this question, we will see later on, this is 5.1. In this question, I will have to prepare a profit and loss adjustment account. Sir, profit and loss adjustment account? Right. So why in this particular question we are preparing profit and loss adjustment account? Yes, this is the relevant question. We are preparing profit and loss adjustment account because in this particular question, we have to do some rectification of the errors. So whenever in the case of admission, whenever you will have to rectify some errors which you committed in the past, to rectify the same, you will have to prepare profit and loss adjustment account. Actually, it is profit and loss account only. But just we signify it that we are adjusting the profit. That is what we mean by profit and loss adjustment account. Is it clear to you? Besides that, as usual, you are going to prepare your revaluation account. You will prepare your revaluation account in normal, usual manner. Correct? You are going to prepare your account. Besides that, there are 3 partners in this particular case. So you will have to prepare partners capital account also. Partners capital account. Partners are quick, slow, and smooth. SM. Quick, slow, and smooth. Correct? So we are going to prepare the partners capital account also. Besides that, in this particular question, obviously you would love to prepare cash account because you have a habit of understanding it better through preparation of the cash account. I will prepare for you cash account. And once the cash account will be prepared, obviously after that, finally we shall have to prepare balance sheet also. So we will prepare balance sheet. These are the things which we are supposed to do in this particular question, post-admission balance sheet. Post-admission balance sheet. Correct? Then, after that, to make you understand better, correct, I'm preparing some more accounts, correct, just to make you understand better. It is not required, honestly speaking, but just to understand better. For example, I'm preparing a stock account. Why I'm preparing this time? Reason being is that new partner is coming along with it. Some stock, some furniture. Do you remember? Yes, sir, we remember. So just to make you understand, I'm preparing a stock account. A stock account. We are also preparing furniture and fixture account. Is it clear to you or not? Right, sir. First, we shall try to understand so far the information which is given to us, and accordingly we will move. For example, very first information was with respect to new partners capital. And this time it was given in the question that new partner is coming with cash of rupees 50,000. In the very first information it is given. And he is also bringing along with him, as we saw in the question 1, furniture worth rupees 10,000. And he is also coming along with him, a stock of rupees 8,000. Stock rupees 8,000. So this time new partner is coming up with 3 assets, one in the form of cash and other furniture and stocks. So his total capital, as I told you also, 2 SM's capital account, Smooth's capital account. You are going to write 68,000. This is the first entry which we have written. Correct? Suppose if I am going to post this entry, just to make you understand better, that is why I am adopting this approach. So in cash account, where is the cash account? In cash account, what I am going to write? Because cash is debited by 50,000, so I will write to Smooth's capital account. Don't write 68,000. Write 50,000 only, because cash is being debited by 50,000. Whereas furniture is getting debited by 10,000 because of this entry. So on the debit side of furniture, I will write to SM's capital. That is 68. That is 10,000. And stock is getting debited by 8,000. So in stock account, I will write to SM's capital. That is equal to 8,000. And because SM's capital account is getting credited by three things, by cash, by furniture, by stock, I am going to write on the credit side of the partner's capital account, correct? On the partner's capital account, I will write here by cash, by cash. He is coming along with 50,000 worth of cash. He is also coming along with furniture and fixtures. That is 10,000. And he is coming along with stock. That is 8,000. So we have made the double posting also. We have already posted this item in the cash account. We have already posted furniture in stock also. Is it clear to you or not? This was the first entry which we have written. Now in this particular question, another interesting point is it was given in the question that we are supposed to compute the goodwill also so that we can find out the new partner's capital. But before we start computing the goodwill, it is very important in this particular question that you must do the rectification. What we mean by rectification here, see, in this particular question, some interesting facets are given. Interesting facets are with respect to one. I will show you so that you understand better. In the question, it was given, however, on checking the past record, it was noticed that on 1/4/2021, first of all, you take care of your balance sheet. Balance sheet date is 31st March 2023. That means your current year is starting from 22 and 23. This is your current year, correct? This is your current year. And question says that on 1/4/2021, on 1/4/2021, 1/4/2021, question says that on 1/4/2021, we bought a new furniture for rupees 8,000. We purchased a furniture for rupees 8,000. But it was wrongly debited to revenue. But it was wrongly debited to revenue. Number one, and we also, and further it is given that firm charges depreciation on furniture at 10% per annum. Actually, it is on written down value. Please write written down value also. Correct? So in this question, what happened regarding this particular mistake, how we are going to rectify it, that is the point is. To make you understand better, see here. Question says that on 1/4/2021, you bought a furniture. Because you bought a furniture on this particular date, you should have had passed the entry furniture account debit to cash account. Your entry would have been, or should have been actually, furniture account debit to cash account because you bought a furniture. Unfortunately, you did not write this entry because it is stated that this was debited to revenue account. This was debited to revenue account means you passed a wrong entry instead of correct entry. Instead of this entry, you passed this entry, furniture account debit, purchases account debit to cash account. On 1/4/2021, we purchased a furniture, but it was debited to revenue account. Revenue account means actually you treated them as normal, what we call purchases, because furniture is known as capital expenditure. Actually, it is a capital expenditure. We should have written the entry furniture account debit to cash, but we passed this entry. But try to understand. Problem is that I do not know how many among you have done rectification quite well. But try to understand. We committed this mistake, no doubt about it. We committed this mistake and another mistake must have followed. Why? Because at the end of the year, we bought this particular item on 1/4/2021 and we treated it as a sort of revenue expenditure because we made the entry purchases account debit to cash account. That means because this year's accounting year is already over, 31st of 3/2022. Accounting year is already completed because right now we are on 31st of 3/2023. That means this mistake is coming to light on, see here, current account is being completed on 31st of 3, 2023 because this is the date on which balance sheet is given and this is the date on which actually new partner is coming into the firm. So that means this mistake is coming to your notice only after the end of 31st 3, 2023. Is it clear to you or not? So what my point is, it means already we have prepared the accounts for this year. Already we have prepared the accounts for this year. 2 years accounting has already been done after the what we call this particular mistake. So problem is that if you have committed this mistake, quite obviously, when you would have had prepared your profit or loss account on this particular date, you would have written it to your what we call debit side of profit and loss account. That means after passing this particular entry, you must have also passed this entry, profit trading and profit or loss account debit. See, actually at this level, we don't use the word trading. Although we use the word trading and profit or loss account, you can simply say profit or loss account. Because you treated it as a revenue expenditure, so quite obviously, you must have debited it to your profit and loss account. So because of this mistake, another mistake followed because you debited it to profit or loss account. Because purchases are debited to logically trading account, but I have already told you we are using trading and profit and loss account synonymously. That means if I am going to combine these two, that means what is the wrong entry? See, word purchases can be cancelled. So purchases account are cancelled. That means my net wrong entry is profit and loss account debit to cash account. This is the net wrong entry. Is it clear to you or not? And my correct entry should have been furniture account debit to cash account. Is it clear to you or not? Second point is, if you would have had passed the correct entry, suppose on 1/4/2021, if your entity had not done any mistake, you would have passed this particular entry, furniture account debit to cash account. Because now you have a furniture, presuming that you have passed the correct entry. Suppose if you have passed the correct entry, let us say for a while, on 1/4/2021, then on this particular date, you would have given a depreciation because the amount is 8,000. So 8,000. And at the end of 31st 3 2022, you must have also charged depreciation. Isn't it or not? Your depreciation amount would have been, because the rate of depreciation is 10%, 800. Are you getting my point or not? When we charge depreciation, our entry is depreciation account debit to furniture account. And ultimately, depreciation is debited to profit and loss account debit to depreciation account. Or simply I can cut it. So my entry will be profit and loss account debit to furniture account for depreciation. That means at the end of 31st 3 2022, I would have written profit and loss account debit to furniture account. If I had done the correct entry on 1/4/2021, my entries would have been furniture account debit to cash account. And then at the end of this year, I would have charged depreciation of 800. Then again, on 31st of 3 2023, I would have again charged depreciation, profit and loss account debit to furniture account. And now depreciation, because depreciation is on written down value. So what will be the amount of depreciation on this particular date? My original value of furniture is 8,000. I have already charged a depreciation of 800. So 7,200. So on 7,200 at the rate of 10%, 720 would have been amount of depreciation. If we would not have had committed any mistake, our scenario of entries would have run like this. Is it clear to you or not? Is it clear? However, problem is that because we did not pass this entry, indirectly it means we also did not pass this entry. It also means we did not pass this entry. In more summarized word, I may say because of this mistake that instead of debiting furniture, I simply treated it as a revenue expenditure and debited it to profit or loss account. Due to it, what happened actually? Due to it, what happened? Two things. Furniture which should have been there in the balance sheet because of purchase actually is not there. But at the same time, depreciation amount which we would have had charged is also not appearing in the books. So first of all, I will have to pass a rectifying entry. In order to pass the rectifying entry, what I will do? My rectifying entry will be, because furniture account should have been debited and is still not debited, now I will debit furniture account. And profit and loss account unnecessarily got debited, so I am going to actually rectify it by crediting it. So in the beginning of the year, on 1/4/2021, I will rectify the mistake in this manner. Is it clear to you? And after this, now I am going to pass these two entries also. That means because now I have rectified, so logically I should have had given a depreciation on 31st/3/2022, and because I should have had given, so now my profit will also get reduced. So profit and loss account debit to furniture account 800, 800, 800, 800, and on 31st/3/2023, again I am going to write profit and loss account debit to furniture account. That is equal to 720, 720. 720, 720. Is it clear to you or not? Is it clear? So that means what is happening? What is happening is that because of your this particular mistake, which now you have rectified, because you have rectified, two things is happening because of this entry. Now, this is rectification entry. Your furniture account is going up by 8,000, number one, and your profit and loss account is also going up by 8,000. So I will post this entry. When I will post this entry in profit and loss adjustment account, actually it is P&L account. I've already told you adjustment simply is showing that we are now rectifying the errors. Furniture account debit to P&L, because now we are rectifying the things, so our profit and loss account will increase. So by furniture account 8,000, because we unnecessarily debited P&L earlier, so now we are rectifying the same by increasing the P&L, and at the same time, because of this, my furniture account will also increase profit and loss account by 8,000. My furniture account will also increase by 8,000. That is on 1/4/2021. Is it clear to you? Just wait for a while actually. Just wait for a while. Actually, there is a courier guy, so I have to wait. Just give me 5 minutes. Hello and welcome again to the session. I'm sorry for abruptly I had to go. There was a courier guy actually and staff is not there today. That was the problem. Anyway, I was simply talking about this particular fact that due to this particular mistake, what happened, first of all, on 1/4/2021, we wrongly debited furniture to revenue account, on account of which our revenue got unnecessarily what we call reduced. That is why now we are rectifying it and we have increased revenue by 8,000 and at the same time furniture by 8,000. Because earlier we did not record furniture, so we did not provide depreciation. Actually, we should have had provided the depreciation for 22 and 23, which we computed earlier here. The amount of depreciation is 800 and 720. Because earlier we did not provide the depreciation, that means our profit got increased. So now we will have to decrease the profit because of these two entries. So I will simply write profit and loss account debit to furniture and fittings account 800 plus 720 1520. Is it clear to you or not? Right, sir? So on the debit side, I will write again to furniture and fixture. You can see, and total depreciation I am writing 1520. Is it clear to you? Is it clear to you? And because furniture is getting affected, I will also write on the credit side of the furniture profit and loss account debit to 1520. Is it clear to you or not? Absolutely clear, sir. Fine. So this is the scenario at this particular moment which you have to take care of in this particular question. Is it clear? So now, in your furniture account, opening balance brought down, in your stock account, opening balance brought down is actually 50,000. So you shall write here buy balance brought down as 50,000. And in furniture and fittings account, you are going to write buy balance brought down as 60,000. Is it clear to you or not? Right, sir. So this is the scenario in this particular question so far as this particular line is concerned. There is another rectification in this particular question. Another rectification is with respect to, and I will show you the rectification. First, let me show you in the question. It's a pretty lengthy question. Although there is no capital adjustment involved, but still it is a pretty lengthy question. See here it is written that in 2023, of purchase invoice of 4,000 dated 25/3/2023 has been omitted. Correct? A purchase invoice of 25/3/2023. Remember one thing, 25/2023 will fall in the current year. Is it clear to you? So that means in the current year, what happened? Your current year must have started on 1/4/2022 and must have ended on 31/3/2023. And on 25th of March 2023, a purchase invoice, you might have purchased some goods, but you haven't yet recorded the same. That is the problem. Is it clear to you or not? So now you are going to record the same. When you are going to record the same, what will happen? Your liability will increase in the form of sundry creditor. Because you have already purchased the goods. At that time, you have already recorded the goods and goods are in your hand also. But problem is that you did not record that you are supposed to pay to the supplier or the sundry creditor. Amount is 4,000. Because now at this particular point, you are simply recording the creditors because goods you have already recorded. That means your liability is increasing. So if liability increases, then it is considered as a loss. So you are going to write profit or loss account debit to sundry creditor, due to which two things will happen. Your sundry creditor will also increase and your profit or loss account will also get debited. So on the debit side of profit or loss account, you are going to write to sundry creditor 4,000. Is it clear to you or not? So as far as rectification part is concerned, I think we have already covered that. Is it clear? So now the next point in this particular question, which we are supposed to do, just wait. In this particular question, what we are going to do, the next part. Next part is just give me a second or so. Just give me a second or so. Correct? Sometime. Right. So my question sheets were lying there, no? That is the problem. So first of all, now I am going to actually tally out this. Correct? Because I have already rectified the two errors which we had faced, on account of which we see now that our profits has increased 2480. This profit will be transferred to the partner's capital account. You are going to write here two profits. Quick and slow, and their profit sharing ratio is 50%, 30%. So in that ratio, you are going to divide it 1488 and 992. So this account is already over. Because this account is already over and we have posted everything. See, all these two items we have already posted in what we call furniture account, sundry creditor. Later on in balance sheet, I will increase creditors. And this profit ultimately will be posted to the partner's capital account. So I will write here by P&L adjustment account, or simply by P&L 1488. And I will write here 992. Another important point in this particular question is now we have to find out the premium brought in by the new partner. How much premium he will bring? First of all, I will have to compute the amount of goodwill, firm's goodwill. In order to compute the firm's goodwill in this particular question, if you remember, 3 years profits were already given to us. First, let me look into the question sheet. Right. Last 3 years profit which are given to us is 52,000. Then we are given 32,000. And now we are also given 28,000. Last 3 years profit are this much. Now here you have to be very, very careful. There was one line in the question that for the purpose of goodwill, you need to take correct profits. What we mean by correct profits? Correct profit means we have prepared profit and loss account, and from there we found that our profits actually was 2480. Isn't it or not? 2480. Because of rectification, our profit of past year has increased by 2480. So we must also add it. So this will tell me the correct profit of the last 3 years. Don't think that it is 4 years. Actually, this is last 3 years correct profit. So correct profit will be equal to 1,14,480. And question has stated that goodwill need to be computed. First of all, let me compute the average profit. Now, average profit will be equal to 38,160. 38,160. This is my average profit. And goodwill will be equal to average profits into 2 years of purchase. So, average profit is equal to 38,160 into 2 years of purchase. Into 2. That is equal to 76,320. This is my firm's goodwill. And Smooth's share, who is new partner, his share of goodwill will be equal to 20% or 1/5. 20% of 76,320. That is equal to 15,000 something, 15,264. So new partner will come up with 15,264 worth of premium. Is it clear to you or not? Now see in this particular case. So new partner, your second entry will be cash account debit. Besides capital, he will bring premium. And he will bring premium to the extent of 15,264. 15,264. And premium will be credited to partner's account. Premium account debit 15,264, and we are going to write 2Q 7632 and 2 slow 7632. And we are going, actually this time we have divided it in sacrificing ratio of 1:1. Why we have to compute sacrificing ratio in this case? Because old ratios in the question, profit sharing ratio of old partner and new partner are also given, and besides that, new profit sharing ratio is also given. When new profit sharing ratio of all the partners will be given in the question, in such a situation you will have to compute the sacrificing ratio. For example, in this particular case, if suppose you are going to compute the sacrificing ratio, for that you will have to apply the formula old ratio minus new ratio. Is it clear to you? By applying this particular formula, you will get your sacrificing ratio. You can compute it of your own. That will be equal to 1:1. Is it clear to you or not? Right, sir. So this is the scenario in this particular question. And what else is given in the question? Besides that, in this particular question, another important point is with respect to revaluation. With respect to revaluation. Correct? It is given in the question that, first I will have to look into the question before I start proceeding, otherwise chances are there that mistake may creep in. Sometimes it's a pretty long question. So we have already taken care of first line, second line also, third line also, and fourth line also. Goodwill is computed on correct profit. Regarding revaluation, stock is reduced by 5% and motor car is valued at 85,000. Motor car is revalued at 85,000, correct? So this is given to us in the particular question and nothing else. And these are the ratios. New ratios were given separately. Old ratio 3:2 and new ratios are given separately. Suppose if you are going to compute, let us say sacrificing ratio, I will do the calculation for you. Old ratio of is quick is 3/5. And new ratio is 50/100 or 1/2. 50/100 means 1/2. So LCM will be equal to how much? 10. LCM will be equal to 10. And it will be equal to 2 into 3, 6. 6 minus then 5. That is equal to 1/10. So sacrifice made by Q is this much. And let us see sacrifice made by slow. Old ratio of slow is 2/5 and new ratio is 30/100 or 3/10. LCM I will take. LCM will be equal to 50 now. And it will be equal to 10 into 2, 20. And then 5 into 3, 15. That is equal to 5/50. Or it is equal to 1/10. So you can see sacrificing ratio is 1:1. Whenever in the question, new ratio of all the partners will be given, in such a scenario, you will have to compute the sacrificing ratio at any cost. Correct? This is the point. So now all we have to do is to prepare the revaluation account first. In order to prepare the revaluation account, it was given in the question that stock value of stock has fallen down by 50%. Here, chances are there that some of you might commit mistake. Don't take 5% of 58,000 because stock in the balance sheet is appearing at 50,000 at the time of admission. So you will consider that stock for what we call finding out decline in value. Is it clear to you or not? So value of stock has come down, as we have already seen, by 2,500. To stock, I'm going to write 5% of 50,000. And plant and machinery is now estimated at 85. Sorry, motor car. So motor car value is going up by 10,000. You will write here 10,000. Value of motor car has gone up by 10,000. You are going to write here 10,000. Correct? Besides that, in this particular question, nothing else is given with respect to revaluation. So 7,500 will be your revaluation profit. Now this profit will be transferred to quick and slow in old ratio of 3:2, 4,500 and 3,000. Correct? After having prepared this, now we are in a position to prepare the partner's capital account also. We will write here by balance brought down. Now, buy balance brought down as per balance sheet is 1,20,000 and 77,000, correct? Then general reserve is also there, 30,000. So divide it in the ratio of 3:2, old ratio, that is 18,000 and 12,000. Then we have already taken care of profit and loss adjustment account. Whatever profit was there, we transfer to partners capital account. Then we have also taken care of what we call capital brought in by the incoming partner. But we haven't taken care of so far the premium. So first entry will be cash account debit to premium. So I am going to write cash account debit to premium account. 15,264 is the amount of premium brought in by the incoming partner. And that premium will be divided between what we call these old partner in sacrificing ratio of 1:1. Sacrificing ratio of 1:1, 7632, 7632. Besides that, in this particular question, we haven't so far posted revaluation profit, and revaluation profit is 4,500 and 3,000. This is the revaluation profit. So nothing is there to be debited to partners capital account. Now all we have to do is to balance them up. Correct? So balance carried on. No capital adjustment in this question. 1,51,620 will be the balance of Q, and then 1,00,624 will be the balance of slow, and new partners balance obviously will be equal to 68,000. So this is the question. Now if you intend to prepare cash account, first you should not forget to write opening balance. Opening balance is 18,000. Capital out of 50,000 was brought in cash and 15,264 for premium. So balance carried down as far as cash is concerned, which we are going to write in the new balance sheet, 83,264. Regarding stock, if I want to know what will be the new balance, we had 50,000 balance and this balance got reduced because of revaluation. So I will write here by revaluation 2,500. And 8,000 worth of stock is brought in by the incoming partner. So balance carried down in stock will be equal to this much. 58,000 minus 2,500 will be equal to 55,500. So in the new balance sheet, I will write stock at 55,200. Likewise, balance of furniture will be 60,000 was already there in the balance sheet. 10,000 worth of furniture was brought in by the new partner. 8,000 worth of furniture got increased because of rectification, but furniture also decreased because of the depreciation which we provided. So final balance in furniture account will be equal to 76,480. Is it clear to you or not? This is how you are going to do this particular question. And then now you can prepare balance sheet in a quick fire manner. Keep the old balance sheet in front of you. First item furniture, but now the balance of furniture is 76,480. We just saw it. Besides that, now the balance in office equipment. There is no change in office equipment, 30,000. And next item in balance sheet is stock. Now balance of stock we just computed 55,500. Besides stock, debtors, and in this question there is no adjustments with respect to debtors, 90,000. And finally the cash balance is given in the balance sheet, and new cash balance which we computed is 83,264. Correct? Towards the liability side, we shall write first of all capitals. As far as capitals are concerned, we will write here quick 151,620. Slow 100,624. Then we shall write by SM 68,000. And then in the balance sheet, you remember you had creditors worth rupees 96,000. And because of rectification, the creditor amount will increase by 4,000. This is what I told you earlier. So total balance in creditor will be equal to 1 lakh. It's a pretty strong question, no doubt about it. I am the first one to accept that this is pretty strong question, correct? No doubt about that, and I am the first one to accept this. So, after having done this particular question, now we come over to the next one. Internet lag is there. It means just wait for a while till the things come to normal. Right. And so with that, in fact, we have come to the end of section 5. Correct? So section 5 has been completed now. So we shall start section 6 in the next session and we will finish it. In fact, section 6 and section 7, we both finish. And there is another section, that is advanced level section 8.1. These 3 questions we will do in the next session. I think for the day it is enough. So shall meet you in the next one. Correct? Okay then.